Okay. On behalf of IFC Markets, I would welcome you to the webinar Currency Indices, Natural Trading Approach. Thank you again, FX Street, for this nice opportunity for discussion. Okay, how can I move on? Okay. Here you can find some brief information about me and the supplementary articles that may arouse your interest. First of all, I would like to ask if some of you apply currency indices in your trading practices. Do you? Just give us a sign. If you did, then this webinar should be even more exciting. Please feel free to ask me any questions during the presentation. It will be more comfortable for everyone. So this webinar gives a short description of trading approach based on portfolio currency indexes. I would like to remark that a suggested strategy is based exclusively on technical analysis basis. It means that no fundamentals are involved directly and no subjective elements are used. So, just a second, I have a question. I don't understand what is indexes. Okay, I will show you in the next slide what is it, what the structure of the indexes. Okay, just start from the beginning. What is the basic rule of technical approach introduced by Mr. Charles Dow? You can see his photo here. So-called Dow theory. Exactly, market price discards all fundamental information immediately. It means that efficient market hypothesis, so-called EMH model, is implicitly taken into account by Dow theory. So we can say that random Brownian motion of price occurs in this case. Indeed, EMH followers state that it is impossible to beat the market because a fair price is formed immediately. So it is not impossible to beat the market according to EMH. And that's why buying the rumors, selling the facts is impossible. That's the theory. In statistics, only 5% of ethic traders Dow rule, inertial trends exist. It means that the long-term memory exists as well, right? Is it a contradiction? Absolutely. There are stages of evolution when the market practically neglects all the fundamentals and continues to process previous significant data. In such a way, we have the reaction delay. We're speaking about the so-called long-term memory. Dow theory is contradictive. And then in the considered case, the current price is not enough. As price doesn't discount all the data, we need more information out of single price approach. One way is an explicit fundamental analysis. Another, introducing fundamental indicators which react to significant fundamentals. Besides, what about net effects when the cross-market interaction occurs? It is not taken into account as well by Dow. However, strong fundamentals shock different markets at different extents simultaneously. The panic sale of euro may cause net strengthening of USD. As a result, suddenly USD-GPY pair comes to the green zone. It becomes possible because of arbitrage trading and cross-market correlation. The strongest fundamental releases have a cumulative net behavior, but at the same time, they process by custom one instrument technical analysis. It's a paradox. So, what is the shortest path to widen the horizon without loss of simplicity? Composition of market indexes is one of the possible solutions. So, a currency index is an instrument which is used to show a motion of considered currency in relation to overall FX market. Most liquid instruments should be taken into account. A basic currency is considered again its major counterparts, for example, euro against franc, yuan, USD, and British pound simultaneously. Currency index has obvious analytical advantage. It clearly shows tendencies in a single economic zone, Eurozone for Euro index, for example. The principal role of a currency index is its objectivity. Its reaction to fundamentals of other currency zones should be minimal. According to the data of Bank for International Settlement, you can hear it, a monthly turnover of central banks has shown 7 currency leaders. You can see them right there. Let's move on to our basic question, the algorithm of index composition. So the first way is a traditional USD index, which is traded in ICE. However, the problem is that this index has a nonlinear structure. A small fluctuation of some component, for example, this one, leads to unproportional growth of index value. It's a very convenient way of composition for trading, but it has a lack of objective fundamental value because it gives a distorted picture. Another way is portfolio approach. So here we represent possible schemes of EURi index and USD index portfolio construction. We preserve simplicity by using equal units. €1 against the portfolio of $1, 1 yen, and so on. You may see that each index is based on the relation of a basic currency and a fixed benchmark. So here is the benchmark. Although some brokerage companies and banks provide currency indexes, they cannot be modified and used in a personal trading system. These indexes, which are represented here, are just the exceptions. Our goal is to include network market data in a classical trading approach by the use of these very indexes. So for this purpose, one of the intelligent trading platforms has been used. NetTradex option creates a personal competitive instrument, allows us to create a personal trading instrument based on elementary assets. I don't know where you can see all the details, but I hope that you can. So indexes are composed via the PCI interface inside the NetTradex platform. We have no intention to trade them. That's why the trading volume may be defined in an arbitrary way. But here I have selected 1 unit of euro against 1 unit of Canadian dollar and so on. The benchmark is built by adding the necessary currencies in the quoted part of the table here. And this is the basic currency, the quoted currencies. EURi and vsUSDi represent EURi index and reverse USD index correspondingly. Here I have shown the interface of EURi index only. In the represented figure, EURi is placed in the basic part, first table, here, while a benchmark portfolio is expressed by the quoted assets, second table. As a result, a new instrument can be added to the platform library. Open-close index prices are calculated automatically on the basis of relation between the basic part, this one, and the quoted part, this one. So only candle borders are displayed in the platform. Now we have two indexes which express the fundamentals of two currency zones. EURi index here, vsUSDi index, which is the reverse to USD index, and EURi-USD daily time frame here. Let's apply the supplementary instruments to filter signals of EURi-USD currency pair. Now we have three charts composed in NetTradex: EURi-USD, EURi index, and reverse USD index. Daily time frame is selected, however, you may experiment with other time frames as well. Please note that the platform can only form open-close prices for synthetic instruments like indexes in PCI interface. However, all the history is available for traditional instruments. So we have open, high, low, close prices for EURi-USD and open, close for the indexes. There is a well-known timescale approach when you consider the given market at 2 time frames or even 3 time frames. That is so-called system of Alexander Elder. This system is merely a modification. We make space extension instead of time extension to filter signals. Here we consider a fragment of daily chart. It is composed by 3 stages of market evolution: flat, trend, and again flat. A conservative trading idea is very simple. EURi-USD position should be open if both parabolics here, give bullish or bearish signals simultaneously. It means that EURi index strengthening and USD index weakening should be synchronized, the net market effect we are looking for. If one of them is reversed, then we should leave the market and close the position immediately. I have highlighted the corresponding regions where the position should be held by green color. Here, 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 and here. The so-called trend regions. If contradictory signals are received, the region is considered as a mean reversal stage. Red regions, here and here. It should be noticed that the considered system can be used simply as an indicator of trend for flight reversion. So you can combine it with supplementary approaches. You can see that the first breakout here is correct, and our system gives a buy signal immediately here. Note that we completely ignore the parabolic of the price chart, these values. However, I placed it here for illustration purpose only. You should open close position at the close price of the current candle when the next parabolic point is formed. Note that the first reversal signal of price parabolic the first reversal here. I wonder if you can see it, but one point is above the price chart here. So the first reversal signal of price parabolic is not confirmed by our strategy. We continue holding the position, so the green region. At the same time, we exit the market exactly at the right time, here, the top. So, we have a false breakout of the support level, this false breakout, but it is ignored again. We enter a position only when a correct breakout occurs. So, we enter the position here. What I suggest is to enter the market at the close level of two signals of indexes, when two signals of indexes are synchronized, and to leave the market at the close level if the synchronization is interrupted. It is very, very simple system. The charm of this approach is that we use analytical power of indexes, but we don't load our deposit by expensive portfolios. So the filtering properties of portfolio indexes are preserved, but we still used it only one instrument. The motto of this trading approach is trend is short, make the most of it. Okay. That's the trading strategy and the basic steps. So search for the consistency, open long short position if the synchronization is present, and then search for inconsistency and leave in the market. It's very simple. So here you can see some backtest results. Please note that commissions, spread, swaps are not taken into account. We only apply any risk. We don't apply any risk management scheme here. All individual properties are ignored in such a way. One pip has always the same weight. These results are simply an illustration of approach efficiency. However, you should process it sufficiently to compose a complete personal trading system. We tested the historical time frame of January the 1st, 2005 till April the 1st of 2015, 10 years. The average yield is 42% per year, with a maximum drawdown of 22% during all the considered historical data. The renewal rate is 1.9 for 1 year. That's pretty good result for a trend-following system, isn't it? It's psychologically quite comfortable as well because we have 62% of profitable trades and only 14 trades per year. So we have position holding of 1 month approximately. As you can see, the system demonstrated a nice performance since 2008-2009 financial crisis. 60 trades point here. This effect is typical for trend following approach, which depends on volatility magnitude sufficiently. So this system is can be used in more efficient way if we enter the volatile market in volatile stage. The demonstrated efficiency provides some hope that this approach can be implemented into portfolio of strategies for position trading. However, it should be processed and combined with risk management tools. We have shown that cross-market analysis based on index implication allows discovering strong, volatile movements. And we have just found how to lead these movements during the completion stage as well. Although the parabolic indicator was used, we don't introduce rigid limitations. You may use convenient trend-following system in combination with a demonstrated approach. Ultimately, the essence of this report was just to show you that a trend-following strategy may be significant. We take the market inefficiency and network effects into account. Okay, thank you very much for your attention. Now I would like to answer your questions if you have any. In any case, you can see my contacts and you can send your comments by email or in our Facebook group or YouTube channel. So we shall wait for 2-3 minutes if you have any questions. Do you sell this system? No, I don't. In fact, that's not the system, that's that strategy, because you can see that I will try to move. Because you can see that no risk management scheme is improved here. No individual properties of some broker system, some broker is incorporated here. So it's not the system because there is a lack of some necessary models of a strict trading system. So that's the strategy and that's the approach. But you can modify it to make it more efficient and just to incorporate in your portfolio of trading strategies. White trade indexes. White trade, can you make a brief of the system? You check indexes, correlations? Yes, this seems so complex. Maybe, but you know, correlation that's some synchronized motion of two indexes. That's right. So we are looking for the stage of market when the euro currencies grow and when the USD dollar goes down in relation to all their currency. That's the effect of net market. And you have just two indexes and EURi in one screen, and you have signals, two signals. And I don't think that it's very complicated just to compare two signals. There is no correlation, no matrices, no some complicated portfolio methods here, just two parabolics for two instruments. Well, thank you very much. It sounds good. Okay, I have one more question. Why trade indexes as have spot market? Can you please give some details? What do you mean? You mean why not? Okay, I see. Why not to trade these indexes? Why not? Why not? It is possible to trade the index as well, but as I said, it will be more expensive to deposit because well, the index purchase, so the index sell is just the opening number of positions for euro, Canadian dollar, and so on and so on. It's very expensive because you will have, you must have quite, you know, you must have a huge deposit to feed the system. And while you're trading just EURi with the count of the indexes, it is much more comfortable. Just you can trade it with just $5,000 of your deposit. So Will this work on lower time frame? So, where can we have EURi index? Okay, I will ask the first question. Where can we have EURi index? You can, first of all, you can sorry. You can compose this index in your platform if it has such option, or you can compose it in NetTrading's platform as I have shown it before. So it's very simple. You just you just open the Create Personal Composite Instrument interface, PCI, one click. Second click, you just add euro in the basic part here, base part here, and you add the other currencies according to my formula in the quoted part. So the volume is equal, it is 1 unit for every currency. And then this instrument will appear in the market watch here. And then the standard, the procedure is the standard. You can just open it like here, and the same for the USD index, and just compare. There is a synchronization option in NetTrading's platform, so you can synchronize the candles here. You can save the S marker. So just 5 steps, but you can find more detailed instruction in NetTrading's terminal on in the website of our company, ifcmarkets.com. So, for example, you can find it here, or you can find more information. You can find more information in these articles, or you can just ask me for more detailed explanation through my Skype or in our Facebook group. You know. Where can we have EURi? Will this work on lower time frame pairs? How? On lower time frames. You know. As for me, I'm a daily trader, and that's why I have tested this system, frankly speaking, only on daily time frame. The only question is that will it cover the commissions that will appear in lower time frames, because you will have more weight of the commissions in lower time frame, that first of all, and secondly, you will have more noise. But why not? I suppose that this approach can be tested in the lower time frames as well. I have just selected daily chart just because it's more convenient to illustrate, and it has more stable trends. You know, it has more stable trend stages. But it's up to you. Why not to experiment with it? Okay, next question. How much does it cost for heavy signals or help to get this system up and running? How much is the subscription for these signals? You know, I will try to show you. Unfortunately, there is no provision of the signals in some regular basis. But for example, you can find the online chart of these indexes in our website in the section Trading Instruments PCI library. I will try to open it right now. Just a second. Maybe okay, trading. Just a second. Instrument specifications. And you see PCI library. That's the library of the library of composite synthetic instruments that are provided by our company. And it's still trying to open it. So you see there is the EURi index, and you can download this file, the composite file of this index, and to import it to your NetTradix platform, or you can form it index step by step, as I have shown you in this platform. But in any case, you can open the online chart and to analyze the index signals, just to compare it with your own trading signals. Okay, well, while it's loading, I will try to answer another questions. This system, that's not the system in this stage, but yeah, you can form it. I use it in my own trading, but there is no Do you think that it's applicable to other, like USD GPY pairs and comparing to the indexes? Yes, sure. I'm absolutely sure that it is, but of course you should test it by yourself, because it's just necessary when you're adjusting your trading system. I suppose that this approach can be applied to all volatile liquid instruments, because I showed you that the more volatile market is, the more efficiency we observe. So of course you can. Where is situated? So IFC market. If you mean you mean our companies, the principal office is located in London, and we have also other offices in Moscow, and in Cyprus. So it's for me, I'm located in Moscow for now. It's very kind to show us, but I don't know how to form. Still very complicated to form it. Will help. How much would it cost? Just from Jen Soren. Jen Soren, please contact me in my through my Skype or through my FX account. I will try to help you to just clarify the system. And now you can hear the online chart of EURi index and 4 hours chart. You can switch on to other time frame and use it in your trading system. Okay. Right now. Okay. So we have a group of companies, and one of these companies is registered in British Virgin Islands. You're welcome. You're always welcome. I will try to help you. Okay. I don't have any other questions. Let's look. I hope it's not very complicated, but I will try to resume the presentation, but something is going wrong. Here. I will try to clarify again some moment if we have a couple of minutes. The composition of instruments, the composition of currency indexes. It's just, each index is just a portfolio of trading pairs that are illustrated here. So the EURi index purchase in the purchase of Euro USD, Euro, Australian dollar, and so on with some weights. In fact, this formula is equal to this formula, and the same for USD index. So the basic part and the quoted part are just incorporated in NetTradix platform, and then you automatically generate the indexes, and you can compare them while you trade in EURi USD. The same can be applied to other currency pairs. And as I have. So the interface is just just several clicks. One click is form the basic part, the coded part, and then you have this instrument in your market watch. You just open it and you see there's this instrument quotes in the screen, and the same approach can be applied to USD index, and then you can just trade as you trade other custom instruments. So there is no difference in NetTradex platform. I hope that I can help you. Are there futures? What do you mean by other futures? Can you trade futures? Oh, what do you mean? No, these indexes. These indexes are synthetic indexes that can be composed and incorporated in your trading platform. These indexes are not traded anywhere in any, in Hong Kong, London, and so on. It's just your personal index, and it is formed by the by FX spot instruments incorporated in this index. So in fact, that's your own personal trading instrument or analytical instrument. Here we use it as analytical instrument, but you can trade it as well, as I said before. Okay, euro prices spot Y. Different euro price is different to spot. Okay, can you please show the difference and how have you determined the difference? Every brokerage company uses its own liquidity provider, and our liquidity provider may differ from the liquidity provider of another company, but the difference should be insignificant. You can send me the screenshot of this difference on these charts to my email, and I will try to explain you. Spot 1.0. So as I said, the difference may be present. Are they similar to stock indexes? It's a very, very good question. Thank you. In fact, when you look at the stock index like Dow Jones Industrial, that's more complicated approach, in fact, than the currency index, because okay, I will try to return. But the structure of these indexes is the same, because let's look at the euro index here. Let's imagine that instead of euro, for example, if I search for reverse index for reverse euro index, I will have USD in comparison to euro, Australian dollar in comparison to euro, and so on. And just if you place USD here and if you place some stock here, the structure will be the same. So you're absolutely right. These indexes are composed on the basis of portfolio approach, and that's why they have the same structure as stock indexes. And this makes them more convenient and maybe more understandable. Okay. I suppose that's all for now. Sorry, no, it's okay. Sorry for coming in late. Can you show us actual figures on your formula? What do you mean? You mean, so the basic formulas are represented here for EURi index and for USD, for USD index. That's the interface of index composition. That's the chart of EURi index and the chart of vsUSD index. And what you meant, the results? What figures did you mean? Okay, as the actual prices quoted. Yeah, sure. That's the real. Just a second. Sure, that's the real chart in a real account. You can see the real candles of your USD daily time frame, and that's the prices. I mean, open close prices only for the synthetic indexes that that were formed. That's the real prices, and you see that when I backtested this model, the backtest was completed by the 1st of April, so just a week ago. Approximately a week ago, I have completed the preparation for this webinar. So all the data is completely actual. So in any case, if you have questions, you can contact me later, or you can look for the recording of this video at FX Street or at our YouTube channel. Okay, any questions? I see. Thank you too. I hope no, because it's better to drink it than to trade. Yes, this very approach has been tested for long-term trading, but maybe this will be the topic of the further webinars. Maybe I will try to test it in smaller time frames, for example, H4 or H1, and I promise you that I will show you the results. In any case, you can experiment yourself. That will be the best experience for you. Thank you too. Thank you, ladies and gentlemen. Thank you for attention. Thank you, FX Street. Goodbye, everybody.